Hello, I am David Bulow, Director of Educational Programs at Proformative, the online community for corporate finance, accounting, treasury, and related professionals. I'd like to welcome everyone to today's webinar entitled Managing Global Growth, Lessons Learned Around Compliance and Risk Mitigation. Globalization means competing internationally, and increased international business opportunities often include increased legal risk. Your team must have a sophisticated understanding of these issues to take advantage of competitive strengths and protect against risk. Using real-world examples, this webinar will address anti-bribery compliance issues so that you may craft strategies to avoid foreseeable pitfalls to do business effectively in the global marketplace. I would like to thank Western Union for helping us make this event possible and for their generous support, for which helps us deliver this webinar at no cost. A few items before we get started. For those who are returning, thank you. For those who are new, welcome. Proformative is the fastest growing online resource for senior level corporate finance, treasury, and accounting professionals. We provide a uniquely valuable online peer network which provides direct subject matter expert advice. We also recently launched our Proformative Exchange, which is a collaboratory platform for researching products and services. All of this is completely noise-free and without advertisements. Please check it out at Proformative.com. A link to this presentation and a recording of this event will be sent out to all attendees within 24 hours. If you would like the current presentation to follow along, it is already posted on Proformative.com/resources for you to download. In order to qualify for CPE, you must answer all 3 polling questions, and you need to have pre-registered for CPE. If you have any questions around CPE, please email them to cpe@proformative.com. We encourage you to ask questions by using the question box in the GoToWebinar panel. We will do our best to have them answered. If we do not get to your questions, we will forward them to today's speakers so they can follow up with you directly. You will be asked to take a short, less than 1-minute survey at the end of the presentation. Please give us your feedback so we can continue to bring you the best possible content and continue to improve. For today's learning objectives, you will gain a better understanding of the risks your company may face through global expansion, gain a greater awareness of compliance issues impacting the global marketplace, and learn how to develop an expansion strategy to address many of the challenges and issues impacting globalization. Now I'd like to introduce our first speaker, Alex Koff. Alexander is the partner and co-chair of the international practice at the law firm of Whiteford, Taylor & Preston. A significant portion of his practice involves international trade and intellectual property issues, and he counsels clients on FCPA and other legal matters in anti-bribery. As an attorney focusing on international law with corporate, litigation, and regulatory legal experience, his practice has a broad span across a variety of industries and covering most of the world. Alex's awards and honors include an AV peer review rating in Martindale-Hubbell, and he is listed in the International Who's Who of Trade and Custom Lawyers. Alex received both his BA and his JD from the University of Michigan and has a master's degree from Cambridge University. And with that, I'll turn it over to Alex.
Thanks, David. We're here to talk about anti-bribery compliance, and the key law in the United States is the Foreign Corrupt Practices Act. So for the Foreign Corrupt Practices Act, the origins, I think, can probably be traced back to the Watergate break-in, and it has 2 components, 2 focuses. There's the Department of Justice rules, and there are the SEC rules by the Securities and Exchange Commission, which apply to issuers. To give you a quick step back, I'm going to talk for roughly 20 minutes, and I'll have about 20 slides. After I'm done, you'll also hear an introduction from Mark, and David will conduct that. And then we'll have some questions at the end, which I hope we can certainly leave about maybe 20 minutes for, which will probably give you an opportunity to really discuss some things that we don't cover here. So I'm going to get into the weeds pretty quickly and I wanted to at least give you an outline of where we were going to go. The FCPA came in, and as I said, it has the DOJ component, it has the SEC component, and the SEC is what's called the Books and Records provision, and it's been amended a number of times. So it first entered in 1977, and there were 88 amendments and also 98 amendments, which expanded the scope, for instance, to include Olympic Committee officials in the wake of some Salt Lake City issues. So what does the FCPA prohibit? The FCPA, in lawyer speak, if you're subject to the jurisdiction of the FCPA, it covers offering anything of value to a foreign government official in order to obtain or retain business or for any other improper purpose. And that doesn't really help you a lot if we're talking about, that won't really help you a lot if you, unless you break it down into the discrete segments for the FCPA. And that includes offering, authorizing, promising, or paying money or anything of value, number 2. 3, directly or indirectly to a foreign government official. And the foreign government official includes any government employee, employees of government-owned businesses, employees of public international organizations. And the true tests come in when you try and assess whether a foreign official includes parastatal corporations, corporations which are partially owned by a government, or instrumentalities of foreign governments. And there's case law which discusses those as well. And you see that often in countries like Russia and in China. And if you're doing business in those places, this is the problem that you need to really pay some attention to. FCPA extends as well to foreign political parties and candidates for political offices. And these were where the amendments to the FCPA have broadened it. The corrupt purpose is an important element of the FCPA because under the criminal liability provisions for the FCPA, there are problems when it comes to showing intent and showing a corrupt purpose. So the United States Supreme Court in 2004, the Fifth Circuit in 2004 in the Kay case talked about bribes, and they looked at what is a corrupt purpose. For instance, if you are paying bribes to obtain favorable tax treatment, such as reducing custom duties or sales taxes on imports, that is considered a violation of the FCPA. And if you notice the second bullet under the for a corrupt purpose, to secure any improper advantage, that was added in the 1998 amendments to broaden the scope of the FCPA. The short answer here is anything that's being done to induce a foreign official to violate their lawful duty, or basically is to induce them to have some kind of a discretionary sway to provide you a benefit or an advantage, violates the FCPA. The books and records provisions, moving as a broad overview to the books and records provisions, covers basically improper or deceptive accounting. I think much of this will be something that, if you're not familiar with the FCPA, is new. For those who are, this hopefully will be a quick refresher. The improper deceptive accounting covers anything dealing with a corporation's financial books and records. They must be accurately detailed, and they must be identified relatively clearly in order to be accurate. The accounting provisions essentially ensure that all public companies have to account for their assets and do so in reasonable detail. The term reasonable detail is defined in the statute basically as a level of detail that would, quote, satisfy prudent officials in the conduct of their own affairs. So although the standard is one of reasonable detail, it's just not appropriate to mischaracterize. It's never going to be appropriate to mischaracterize transactions in a company's books and records as well. It's also important to note that from a legal standard, the word materiality, there's no materiality threshold on the books and records provisions. So the SEC has enforced the books and records provisions consistently when someone has misreported either large bribes or payments, for instance, or inaccurately recorded smaller payments as part of a systematic system or pattern of bribery. So you need to be aware not only of keeping your books and records in reasonable detail, but the second thing to understand is that you also have to accurately report them. And I would say the backbone of the SEC books and records enforcement provisions have come up when someone will pay a bribe or do some other conduct that, as we'll talk about under the exceptions and the two affirmative offenses, if they actually do something that otherwise would not arise under the DOJ liability side, under the SEC they record it inappropriately in the books and records side. There's also a provision under 18 U.S.C. 1001, which is false statements to the government. And even though the FCPA applies only to issuers, which are typically public corporations, if you inaccurately report your books and records and you take a deduction in a different way, you could potentially extend yourself to FCPA liability. So who's going to be covered under the FCPA? Well, the FCPA applies, as you would expect, to U.S. organizations, partnerships, joint ventures. It applies to their officers, directors, and also applies to their agents. And it also applies wherever located to U.S. citizens, nationals, or permanent residents. But there was a loophole that was fixed with the amendments that now applies the FCPA to foreign corporations or nationals, even if they're not issuers or domestic concerns under the readings of the statutes. So if a foreign company since 1998 is in the United States and does something that creates FCPA liability, either directly or through an agent, or if they engage in any act in furtherance of a corrupt payment, say an offer, a promise, authorization to pay, conspiracy, they are going to be subject to FCPA liability. And the jurisdictional components include, it goes so far as to even include a foreign national who attends a meeting in the United States that furthers a foreign bribery scheme, as well as any co-conspirators, even if they themselves didn't attend the meeting under some conspiracy statutes. And the 1998 amendments also removed, under the alternative jurisdiction, any requirement that there be a use of interstate commerce, like the wire, the emails, or telephones, or the U.S. banking system. So any U.S. company or person is going to be subject to the FCPA no matter what they do. In terms of foreign subsidiaries, often the question is asked, are foreign subsidiaries going to be liable, are parents going to be liable for the acts of their foreign subsidiaries? Generally, given the time quickly, there are two ways to establish a parent-subsidiary liability relationship. The first is, obviously if the parent participated sufficiently in the activity directly so that they're going to be liable for the conduct. Example, if they directed the subsidiary's misconduct or they directly participated in the scheme. A second way is under traditional agency principles. Under the agency principles, the key issue is control, and does the parent control the subsidiary? So even if the formal relationship between the parent and the subsidiary is, what you need to do is assess that formal relationship, and it's important to this analysis, and you need to understand the practical realities of how the parent and the subsidiary actually interact. And oftentimes, as you get into the weeds, it's the factual circumstances that govern liability in the FCPA. So if an agency relationship exists between a parent and a subsidiary, the parent is liable for the bribery committed by the subsidiary or the subsidiary's employees. In one action that the SEC brought, for instance, the subsidiary's parent had reported directly to the CEO of the parent issuer. The parent corporation routinely identified the president as a member of its senior management in its annual SEC filings. The parent's legal department approved the retention of the third-party agent who made the bribes. An official of the parent approved one of the payments themselves to third party. Under those types of circumstances, the parent company was deemed to have sufficient knowledge and control of the subsidiary's actions, and they said that they were liable under the FCPA. Indirect payments. So indirect payments are The FCPA prohibits bribes made indirectly, whether they're through agents, consultants, sales representatives, or anyone else. And if the indirect payment is made by someone who knows, and that's the term where you get into the corrupt payment, the scienter requirement, that it will be used corruptly, it's a crime. Knowing a bribe will be paid is a conscious purpose to avoid learning the truth, and willful blindness. You can't stick your head in the sand. The Supreme Court in '98 said in the Bryan case, as a general matter, when you're using an understanding of knowing in the criminal context, a willful act is one undertaken with a bad purpose. When somebody knows that it's really going to be done that's really going to be done with the intent to violate the act. So, as a result, my recommendation is that you only pay your sales reps based on written agreements, that the agreements specify the amounts payable. You can only pay those amounts called for under the terms and conditions of those agreements, and that you really sort of work hard to ensure that you have a set of internal controls, and those internal controls are really followed. Let me move real quickly to some of the penalties. You see some of the penalties, and I took some of the cases that have been out there with names that people kind of recognize, and this is over an historical period. There's been a number of these which have really been a lot more noticeable, like obviously the Siemens case. There's Lucent, Mirabeni, Technip, many other companies that are listed here for companies as well as individuals. One thing to note on the individuals, though, in terms of statute of limitations, I didn't include it on the slides, but generally it's a 5-year statute of limitations, and that's in 18 U.S.C. Section 3282. The FCPA anti-bribery and accounting provision side doesn't specify a statute of limitations, so you go to that catch-all statute for the 5-year general limitations. And for conspiracies, if there's a conspiracy alleged, the government under 18 U.S.C. Section 371, it needs to only prove that there's been one act in furtherance of the conspiracy that occurred during the limitations period. And in that way, the statute of limitations will be extended and made much longer. Two ways in which the government increases the statute of limitations. Generally, companies, when they report a violation or when they're investigated, will enter into a tolling agreement with the government, which will voluntarily extend the limitations period. And the second way is when the government, under USC Section 18 U.S.C. 3292, the government will seek a court order suspending the statute of limitations in a criminal case, for up to 3 years, if it's needed if the government is trying to obtain evidence from a foreign country. The civil actions in civil cases brought by the SEC, for instance, you're going to want to look to 28 U.S.C. Section 2462, and that's also, again, a 5-year statute of limitation, and it starts to run from when the claim first started. What does the FCPA not prohibit? It doesn't prohibit facilitating payments, routine governmental actions. That's an exception, so it's not even covered under the FCPA. The burden still rests with the government to pay, the burden still rests with the government to prove those disputes. The other two ones were added in 1988 amendments. They were affirmative defenses. Be careful there, because like in a case of self-defense for murder, you've already admitted that you've done it, and the burden is now on you to prove that you satisfy the requirements of each one of these affirmative defenses. The first affirmative defense is that it's legal and written in a foreign country, and the second is that it's a bona fide business expense. Again, these are DOJ requirements. Make sure you don't misclassify them. Facilitating payments, these are things that are basically grease payments. They are to obtain routine governmental action, and generally you're paying the government to do what it's really supposed to be doing anyway. And routine governmental action is listed in the statute with illustrative examples as police protection, mail delivery, telephone service, power and water supply, basically things that are not discretionary. Anything that someone is supposed to do in order to comply with their job is not going to be a problem under the FCPA. Obtaining permits, processing governmental payments. If there is any amount of discretion injected, you're opening yourself up to risk in terms of the facilitating payments or the grease payments. In terms of the affirmative defense for is the payment legal in the country, it has to be legal under the written laws of the country. It can't be simply customary. I would caution that this is rarely, if ever, used because I've never seen a foreign country that has in their written law that it's permissible to bribe their government officials. So I often consider whether I should even include this as a possible affirmative defense, but because it's in the statute, we do have to cover it, but I do not hang your hat on this one. Under the bona fide business services and expenses, under that affirmative defense, you have to show that these are reasonable and bona fide expenditures that are directly related to promotion, demonstration, or explanation of products or services. And it has to be reasonable travel and lodging expenses and so forth. The expenses must be for the government official only. Typically, flashpoints are when someone is brought over as a foreign government official and their spouse is brought over as well, and they make a side trip to Las Vegas to go gambling. Those are the things where the government really cracks down. But you look at things like gifts and travel, entertainment, and other things of value. That's where this affirmative defense really takes root. Give you some examples. In the ABB case, which was a case brought by the DOJ and the SEC, ABB gave the government official who was brought over a country club membership fee, a generator, household maintenance expenses, payment of cell phone bills. They gave them an automobile. I think it was about $20,000. And the government official received another $250,000 through a third-party agent. Pretty clear FCPA violation in that sense. There are also easier examples as well, but there's a number of easy prosecutions here. The UTS Starcom case, the Lucent Technologies case. One defendant even provided airline tickets to a cousin and a close friend of the foreign official whose influence the person was trying to curry favor with. So what also applies here is you're not permitted to give a gift to a family member or to a personal friend if the ultimate intent of that gift is to really come around and impact the decision maker who's a foreign government official. And we can talk during the Q&A period about what is appropriate and what is permissible in terms of gifts and other things, because there are circumstances where gifts of nominal value, like cab fare, reasonable meals, entertainment expenses, promotional items, those generally do not result in enforcement action by the DOJ, but again, you have to look at the full facts and circumstances. And the rule that you should really set for your company is you need to set clear monetary thresholds for gifts along with annual limitations, with limit exceptions for gifts approved only by appropriate management officials. And I think that the DOJ recognizes that there is instances of appropriate gift giving, and you should also make a mental note that even if the FCPA doesn't prohibit it, you should also be wary of the domestic bribery counterparts in that local jurisdiction to make sure that you're not running afoul of any of those laws. I'm going to run through just some quick slides before I turn it over to Mark, which is if you're talking with a foreign agent or a joint venture partner, look at their qualifications and reputation, do some due diligence, talk with outside counsel, memorialize it in a file so that if there's a problem later, you've actually done what's required under your own policy to make sure that that person has been vetted, examined, and you took the necessary steps to make sure that there's someone who's appropriate to be representing your company and not exposing you to liability. Contract terms, make sure that when you're looking through contracts and you're executing them with foreign entities that you insert some anti-corruption clauses. You make sure that there's no fee splitting that's prohibited, that's permitted with other parties. You've set reasonable limits on expenses. Documentation is required for expenses, and so forth. And actively supervise that agent. Make sure that they're actually performing the work that's required. Get monthly reports. Watch for some red flags, which I'll give you in a second. And limit fees. Generally, fees that exceed 10% maximum without other factors being there create a red flag for me. And red flags are a warning signal that tells you you need to have some increased scrutiny or heightened vigilance. And this is something that will be also a tip-off to the DOJ folks to say, why didn't you know that there was a problem here? if the agent expressed a concern over an FCPA clause, that agent has a bad reputation in the area that you're trying to do business, the commissions are too high. They're asking for payments in cash to a numbered account or in a secret jurisdiction. A lot of that is being taken care of now with FACTA concerns. But if there are issues here that are arising that give you some pause and the agent isn't explaining why, you should look at it a little bit more. And you can also get some information on those agents through the Foreign Commercial Service and some other entities, through Gold Key Services and other ones that they provide in all the embassies around. This last slide gives you some legal citations for what the rules cover, and I also included some other U.S. global compliance rules that you should be aware of if you aren't thinking about them. Sanctions rules, typically not dealing with the U.S. bad guy countries, the terrorist 5 countries, the Cubas, the Myanmars, the North Koreas of the world, the Sudans, but also dealing with people who are on what's called the specially designated nationals list. In terms of export control, making sure that you're complying with the regimes, you need a license if you're going to be selling technology that's controlled by the U.S. government, and also some anti-boycott compliance concerns. I'll stop there and I'll turn it over to Mark and be ready to answer questions at the end.
Thank you, Alexander. Appreciate that. We will now, in moments, be moving over to our first polling question. Remember, if you are looking for CPE credit, you must answer all 3 of the polling questions, and it'll be up on your screen in just moments. We would ask everyone to please answer the polling questions as they are statistical in nature, and this helps us get better results. I'll leave it open for a few more moments here for everyone to get their answers in. Also, if you do have questions for today's speakers, please use the question box in your GoToWebinar panel, and we will try to get to those in the Q&A session. I'll leave it open here just for a couple more seconds for everyone to get their answers in before we move on and introduce our next speaker. Thank you very much. I will be closing this down. And now I would like to introduce our second speaker, Mark McAmey. Mark leads the Mid-Atlantic Risk Advisory Services and National Anti-Corruption Advisory Service practices for McGladrey. He has more than 25 years of experience providing risk and financial advisory guidance to global organizations and companies. His areas of expertise includes anti-bribery, anti-corruption compliance, enterprise risk management, internal audit, Sarbanes-Oxley, and advisory and regulatory advisory and internal controls. Prior to joining McGladrey, Mark served as Director of Enterprise Risk Services at Deloitte & Touche. Mark has previously served as CEO of a business process outsourcing firm, CFO for 2 different organizations, and Director of Risk Management for a global construction and real estate organization. Mark also is a certified public accountant and a certified fraud examiner. And with that, I will turn it over to Mark.
Thank you, David. And now that we've heard from Alex on some background on the FCPA, we should have a pretty good understanding now of the Act. We're going to talk for the next few minutes about some best practices around compliance with the FCPA. As some of you may know, this past November, the DOJ and the SEC, who, as Alex mentioned, jointly enforced the FCPA. The 2 agencies issued a resource guide to the FCPA. And although the guide did not really break any new ground, it does serve to consolidate some of the best practices and some of the legal precedent that has been established over time with respect to the Act. And in particular, it lays out what they refer to as the 10 hallmarks of effective compliance programs related to the FCPA. And we're going to walk through those 10 hallmarks in just a moment. But as you'll see, the compliance elements will tend to build on each other. So we'll start out with fairly simple building blocks, and then we'll become progressively more complicated and complex and more challenging, therefore, for most organizations to implement. The first principle or the first element of the effective compliance program as defined by the agencies is what is commonly referred to as tone at the top. This is a very common phrase that you hear a lot in the area of risk management and compliance. And as with all effective compliance programs, the fundamental building block is this tone at the top. And this simply is not about senior leadership talking a good game. It's really about embracing a corporate culture that is built around people doing the right things, people behaving ethically, and being good corporate citizens. And I think it's also important that your company's policy against corruption be very clear and not full of exceptions, as Alex indicated. When it comes to the FCPA, there's also this concept that we sometimes refer to as the tone at the middle, and this may be a new concept for many of you. This generally refers to the example that's being set not by the U.S.-based senior leadership of the organization, but rather by the leadership and the culture of the foreign operation itself. In other words, does the foreign operation foster the same type of do the right thing culture, or do they look the other way when it comes to corrupt activities that are considered just sort of the way things are done in that particular country? I recently joined the chief compliance officer at one of my clients, which happens to be one of the world's largest companies, and observed him as he literally looked the general manager of his Thailand operation in the eye and told him that he would rather shut down the facility than pay even a $5 bribe to a government official. So that's a clear example, I think, of a tone at the top being set in a much more powerful way than simply a memo or an email that gets distributed throughout the organization. The second element of the compliance program is to have a clear and well-communicated code of conduct throughout the organization. The code of conduct should be unambiguous and should be communicated to all employees in their local language, and I think that's a very important point. In addition to the code of conduct, the code should be supported by compliance policies and procedures that give clear guidance as to what is appropriate and what is not appropriate, and how employees should conduct themselves if and when they're confronted with risky situations and transactions. The third element, or third hallmark of the effective compliance program, is referred to as oversight, autonomy, and resources. And here we're focusing on ownership of the compliance program. Who actually owns overall responsibility for the program? Is it a senior level executive, or is it a mid-level manager? And does this person have direct access to the board and its audit committee? With respect to resources allocated to compliance in this area, it's important that you be able to demonstrate that those resources are proportionate to resources allocated to other compliance activities relative to the risk of non-compliance. Resources should also be appropriate given the complexity of your organization, the industry that you operate within, and the specific risks and locations of your operations abroad. In other words, one would expect to see more resources allocated to FCPA compliance activities in Thailand than in Canada, for instance, all else being equal. The fourth element of the compliance program is risk assessment. And risk assessment really is the key to making sure that your FCPA compliance program is a thoughtful one. And it's important to note that risk assessment in this context is not merely the inclusion of FCPA or corruption risk as a high-level risk contained within your enterprise risk assessment or even your internal audit risk assessment. What we're talking about here specifically is a corruption risk assessment, one that considers specific processes, people, and transactions that present inherently risky situations. This type of risk assessment would therefore consider things like, what are the local business practices? Which people within my organization have direct interaction with foreign officials? It would also include a clear understanding of who would be considered a foreign official within the specific context of your business. So as Alex mentioned, that's not always as clear as you might think. This is perhaps the most significant and perhaps also the most least understood element of the overall compliance program. Many of our clients are at this stage of their compliance program. They have developed their code of conduct, their anti-bribery policy and procedures. They've built a culture that's based on ethical behavior, and they've begun to allocate some resources and assign ownership to their program. Those things are more or less table stakes. And now they're looking to take their program to another level. They're looking to create something that is unique to their specific organization and to their risk profile. Risk assessment is how to begin that process and really governs much of the organization's corruption risk management process. The fifth component of an effective compliance program is training and continuous advice. This element seeks to ensure that ongoing communications and training with respect to your organization's FCPA relevant policies and procedures are effective. And it's important to note that one-time training and certification is not sufficient. This training also needs to be delivered in the local language. It's very critical. Training that is delivered throughout your organization in English only may actually be less effective than no training at all, as it could be construed as simply going through the motions. The sixth component of an effective compliance program is what we refer to as incentives and disciplinary measures. This element speaks to having incentives for doing the right things and disciplinary measures for doing inappropriate things. Most compliance programs that we see include the latter. Most of them include disciplinary measures, generally up to and including termination of employment. That's fairly typical, but rarely enforced. If such a provision is in your program and you have not enforced it, it is really not an effective provision. Most compliance do not reward appropriate behaviors. Those are expected to occur, right? So most of our organizations simply do not reward that behavior. And to those of us in the U.S., appropriate behaviors is fairly clear. But as Alex indicated, in many countries, these types of behaviors, these types of payments are customary and are simply the way business gets done. So perhaps it's not so obvious. What are the appropriate behaviors that you expect as an organization? So consider incenting individuals for doing the right things and make sure they understand what those things are. The seventh component is third-party due diligence and payments. Alex spoke to this at length, and I'll speak to it briefly as well. It's critically important to nearly all global organizations, frankly. In fact, FCPA or corruption risk for many organizations rests almost entirely with third-party providers. Third parties are engaged to perform any number of activities on behalf of your organization all around the world. It's important that you know these vendors. Know why you're engaging them. Understand their history and their principles. Do they have a history of unethical behavior? How long have they been working with you? These are all questions that you should be asking on a regular and recurring basis, not simply on the very front end of the relationship. The risk here is significant, and some estimates have third-party risk or vendor-related risk as high as 70% of overall FCPA risk for most organizations. So it's very significant. Unethical behavior of third parties is your risk. It's not just theirs. The eighth element is confidential reporting and internal investigation. This deals with the process that your organization has for allowing employees and others to report what they see as inappropriate behavior. Does your process encourage this type of reporting, or does it discourage this type of reporting? And is it truly anonymous? These are questions that you should be asking. And perhaps most importantly, beyond the process for collecting this information, what is your process for actually investigating any allegations that may arise from these types of reporting? Are the allegations taken seriously? Are they efficiently and reliably investigated to the point of a logical conclusion, regardless of what that conclusion may be? So again, these are things that are critically important and that we rarely see in terms of the effectiveness of what the DOJ and the SEC would expect to see. The ninth element is continuous improvement. This one may go without saying, but it's the need to continuously improve your compliance program. Are you periodically testing the program to ensure that it is working as it was designed and as it was intended to operate? Or is your program static, or is it dynamic and able to change based on the changing and evolving business and risk conditions of your organization? A one and done type of approach is generally not going to be considered an effective program by the agencies. And most importantly, can you honestly say and demonstrate that your organization has changed its people, changed its processes, changed its vendors, or made any significant change based on the results of your testing or the outcomes of your investigations? So again, merely going through the motions of testing your program, but not actually taking corrective action based on what you find through that process is an ineffective compliance program. The 10th and final element deals with mergers and acquisitions, and you heard Alex speak to this briefly as well, and specifically the due diligence activities around FCPA compliance. Are you engaging the appropriate FCPA or anti-corruption experts, either internal or external, in your due diligence process? Are those same subject matter experts involved in the post-merger integration process? Or are you instead simply allowing the existing business practices of the acquired organization to simply continue as is, therefore subjecting your organization to all the risk and liability associated with that organization? Key things to keep in mind. Those are the 10 hallmarks as laid out by the DOJ and the SEC. There are obviously many others, and we'd be happy to discuss those if we had more time. Certainly in the Q&A session, we would be happy to do that. Just a few key takeaways that I'd like you to consider as you leave this presentation. Number one, do you fully understand the corruption risk that your organization faces? And do you understand how vulnerable you may be? Number two, can you identify all foreign officials that are unique to your specific business? Number three, are your internal controls properly designed to mitigate corruption risk, and are they operating as designed? This is an area that Alex mentioned as part of the books and records, or the accounting provision of the Act, the books and records provision, which requires that an organization or an issuer have appropriate internal controls that are designed and operating effectively to mitigate corruption risk. The fourth question, what are other organizations like yours doing to manage their FCPA and other corruption risks? And then finally, what are you doing to ensure that your FCPA compliance program is, in fact, really working for you? Simply having the program but not knowing if it's really effective at preventing and detecting these kinds of risks really isn't worth the paper that it's written on. That concludes the prepared portion of our presentation. I thank you for your time, and I will turn it back over to David.
Thank you, Mark. We will now, in moments, be putting up the second of 3 polling questions. You should see that in just moments here. Please, everyone, answer this even if you're not looking for the CPE credit, which helps us give us better statistical results, and we will try to show these just before the Q&A session. If you do have a question for our speakers, please use the speaker box in your GoToWebinar panel, and we will try to get to these in the Q&A session, which we will be there just shortly. I'll leave this open for just a bit longer so everyone can get their answers in on the polling question. And at the end of the presentation today, we will be having a short survey that we ask you to stay and help us out with. It's a short, takes about 1 minute. I will keep this open for about 5 seconds so everyone can get their polling questions in before I close this down. Okay. I will now share the first polling results. In 1 moment, you should be seeing this on your screen. Mark, maybe you'd like to comment on this. It looks like 47% are developing their program. Is this pretty common to what you see out there?
It's not uncommon at all. In fact, it looks as though 3/4 of the audience has either no program whatsoever or just in the early phases or early stages of development. Very few would consider themselves to be having a mature program. And there are a few out there who believe they have a leading-edge program, so that's great. But certainly those 77% or so that are in the first 2 categories might want to rethink their programs at this point.
Great. I will now bring up our second polling question, and I will turn that over to Alex. Is this pretty typical of what you see as well?
Well, it's typical in the sense that maybe half the audience do not think that FCPA or bribery and corruption risks are a significant risk to their organization, but the broadened enforcement and the broadened prosecution by the FCPA, I think they should be cautious, because depending on what your organization does, oftentimes if you land on the front page of the paper for an investigation and then it ultimately is determined weeks or months later on page 24 buried inside that there is no violation, it's closed out, the reputational risk is a big one. And oftentimes the amount of money spent to deal with something effectively to prevent that initial look is really insignificant compared to the reputational harm and also the dollars spent to deal with the government investigation once it comes up.
Great. We will now transition into the Q&A portion. We will try to get to everyone's questions. We do have quite a few, so if we don't get to them, we will channel these off to our speakers so they can get back with you directly. Our first question from the audience asks, could you discuss how the FCPA in context of an M&A activity works?
Can I handle that one?
Yes.
Alex. Yeah, I see that a lot, and that's a great question. I hear about it in the context of we're an acquiring entity. Are we going to be liable for the FCPA violations of the company that we're acquiring, and other questions that arise with that? And basically, companies acquire a whole host of liabilities when they merge or acquire other companies. Those come up in contracts, torts, regulations, statutes. But successor liability applies to all of those in civil and criminal contexts, and the FCPA is really no exception. So if a company is going to enter into an M&A, due diligence is obviously a key important component. And oftentimes people will then ask as a follow-on, if the company that we acquired was not subject to the FCPA, will there be retroactive liability because we are subject to the FCPA? And the answer to that is no. There will be no retroactive liability. A foreign company is not going to all of a sudden become, their past conduct will not impute liability to the company that bought them. But you should note that the DOJ and the SEC, as a broad matter, encourage companies to conduct pre-acquisition due diligence and improve compliance programs, internal controls after acquisition, for a number of reasons, which are pretty obvious. Due diligence helps accurately value the target company. It reduces the risks that the acquired company will pay bribes. The consequences of violations and covered through due diligence can really be handled effectively right off the bat. And comprehensive due diligence demonstrates what really the FCPA is meant to do, which is a genuine commitment to uncovering and preventing violations. A lot of times the DOJ and the SEC have declined to take action where companies have voluntarily disclosed and tried to remediate their conduct. And there's only been a very small handset where they've taken action against successors. One example is the El Paso case, which was out of the Iraqi oil for food case. And there the U.S.-based company was charged basically with an SEC books and records provisions for continuing the kickback regime and scheme that was originally started. And obviously you see why that happened. Can I just give some practical tips, David? Do I have time to just do that real quickly?
Go for it.
Some practical tips to think about. Typically, why don't we say, number one, conduct a thorough risk-based assessment. I mean, make sure that you have an anti-corruption due diligence program in place, and ensure that the company that you're acquiring, their code of conduct, their compliance policies are there regarding the FCPA. Train those directors and employees of the newly acquired entity quickly. Train their agents, their business partners, and focus in on other relevant anti-corruption laws as well. Do an FCPA-specific audit of the newly acquired or merged entities, and do it as quickly as possible, and disclose or consider disclosing them certainly to your outside counsel. And whether or not you want to disclose that to the DOJ really could be helpful. In the Latin Node case, which is a 2009 case out of Florida, the DOJ and SEC brought in an action, but they only brought it against the predecessor company, the company that was acquired, because the Florida-based company discovered in post-acquisition due diligence a problem, and they conducted an internal investigation. They cooperated with the DOJ. They took all appropriate remedial action, and they were doing what the FCPA was really meant to do. If you don't have time to do pre-acquisition due diligence. There was an opinion release 0802, it's 8082, said that under certain circumstances, the DOJ won't take enforcement action against you. But that was an opinion procedure. The opinion procedures apply only to the company that requested it. So if you don't have sufficient time to do due diligence, consider requesting an opinion from DOJ. The DOJ will install significant and draconian requirements on you. You have to follow them specifically, but it's your golden ticket out, and it's a nice thing to do, I think, if you're risk adverse and conservative.
Okay, our next question, Alex, I think is maybe you can answer as well. What happens if we're asked by a foreign official to make a charitable contribution in a foreign country?
This happens all the time. Companies often engage in charitable giving as part of legitimate local outreach efforts, and it's encouraged. U.S. companies should be good corporate citizens, and the FCPA doesn't really prohibit charitable contributions or prevent corporations from acting as good corporate citizens. But the companies cannot use that charitable contribution as a shield or pretense to funnel bribes. I mean, that's just the bottom line. In Sharing Plow was tagged, Sharing Plow, the big pharmaceutical company, for using charitable donations, and they were asked to give donations to a small local castle restoration charity, and it was headed by a foreign government official, and that official was really trying to be induced to direct business to Sharing Plow. And the case was made based on internal documents at Sharing Plow's subsidiary that showed that the payments were not really viewed internally as charitable contributions, but rather as dues that they were required to pay. This all really comes down to what we've been harping on before in the M&A context. You have to have proper due diligence and controls. That's going to be even more critical in the charitable contribution context. There was an opinion procedure released. It was 1002, where DOJ described specifically the due diligence and controls that can minimize the likelihood of an FCPA violation. And there was one case where a European subsidiary of a U.S. NGO was asked by a foreign government to make a grant to a microfinance institution, and it was as a prereq to the subsidiaries doing what they wanted to do in that country. And the DOJ did not take action in that case, primarily and exclusively because the company's due diligence and controls that it had planned and put in place made sure that there was going to be no FCPA violation. So the things to think about is, one, what's the purpose of the payment? Two, is that payment consistent with the company's internal guidelines dedicated to charitable giving? Is it going to be made at the request of a foreign official? Is that official associated with the charity? And if so, in what capacity? And can that official make decisions regarding the business of that charitable, of the company given the charitable contribution? And is the payment really conditioned upon receiving any other benefits or business? Those are the things I think to think about broadly on the charitable contribution side.
Okay, this next question is a two-part question, and I will send it also to you, Alex. What if our employees or facilities are threatened unless we pay a corrupt official? And the second part, is there a difference if that same official demands a bribe as a price for gaining entry into the market?
Another good question. That comes down to some legal terms. One is extortion and one is duress. Situations involving extortion or duress, the question is, do those give rise to FCPA liability? Congress talked about this in their legislative history in 1977 when they were passing the original FCPA law. They said that a payment to an official to keep an oil rig from being dynamited should not be held to be made with the requisite corrupt purpose. Because remember, there was that intent, that knowledge base, that Bryan standard that we talked about from the Supreme Court. But that's different from mere economic coercion. And mere economic coercion doesn't really rise to the level of extortion or duress where somebody's putting a gun to your head and saying you have to do this or we're going to kill or harm your employees. So the distinction really between extortion and economic coercion, there was a case called the Kozeny case. It was out of the Southern District of New York in 2008. And that was a case where the court concluded basically that an individual makes a payment under duress where they're really forced to do it upon threat of physical harm. That's not going to be liable under the FCPA because they don't have the corrupt intent. But that's really distinguished from somebody who's saying, we want to go into this particular market and we have to pay this bribe in order to play in that market, because you could really walk away, you could turn your back, and you could have done something different. And I think that's where the court sort of come down on that decision. If that makes sense.
Great. This question I'll hand off over to Mark. It kind of fits right in with our polling question. How would you recommend someone getting started or improving upon your compliance program?
Yes, it's a good question, and I think going back to the sort of the compliance elements that we talked through, the single most important thing I would suggest that most organizations are going to have the basics. They're going to have a code of conduct. They're going to have some sort of a policy against making bribes. They may have allocated some resources to beginning to build out their program, but the single most important thing that I think any organization could benefit from is a corruption risk assessment. So really taking a hard look at your organization, where you do business, what industry you're in, what countries you're in, what types of vendors are you engaging, what types of interactions are you having with foreign officials, and doing a deep dive into those areas where you have the most significant risk and gaining a full understanding of that risk. That's really the most important thing, and probably the single most important thing that any organization can benefit from. That then will drive how you allocate resources, how you build your compliance program, how you do a lot of the risk management related to FCPA and corruption risk will be driven by the results of that risk assessment. So I would think that's where most organizations are going to want to start.
Great. Well, I want to thank Mark and Alex for those great insights and discussion. I'm sorry we couldn't get to all the questions today, but we will get your questions if they were not answered to today's speakers, and we will have them answered directly to you after the webinar. Last few housekeeping items before we end the webinar today, at which time you will be prompted to take a short survey. We truly value your feedback and appreciate your time to help us continue to deliver great content, and at which time you will easily have a chance to connect with the speakers or today's sponsors with a click of your mouse. Please, quick reminder on CFO Dimensions will be held August 21st and 22nd in New York. I'd like to personally invite you to this premier conference on strategic leadership in finance. I want to thank Western Union for sponsoring this event today. I also want to thank Alex and Mark for their time. They gave us a lot of information. It was really helpful. Great job, guys.
Thanks for having us.
At this time, I'd like to launch our last of 3 polling questions. You should be seeing it on your screen just shortly. Should be coming up. I also want to thank the audience for your time. Again, after we close down the webinar, you'll be prompted to take a short survey. If you would please ask you to participate so we may get better, deliver the right type of content and webinar to you, I would greatly appreciate it. Also there, you'll have the opportunity to request a connection with our speakers, an introduction to Western Union, or request more information on CFO Dimensions with a click of your mouse. Thank you again. We hope to see you on another Proformative event or online at proformative.com. This concludes our presentation. Have a great rest of your day.